All right, we're going to go over modified accrual basis accounting today. This material, especially the beginning of the slide. Now we kind of covered it in the last slide too, but this is the most tested material. If you really have this down well and can distinguish all the different ways that they test this, and you know the rules, then you'll be able to answer the majority of the governmental questions on the CPA exam. So modified accrual basis accounting is really important. We are talking about our governmental funds. Okay, so we are not talking about proprietary funds, fiduciary funds, or government-wide financial statements. Okay, remember there's a difference between governmental funds and government-wide financial statements. So we are only talking about our governmental funds. They're the only ones that use modified accrual basis accounting. And these are the ones that are GDPSC. So general debt service, permanent, special revenue, and capital projects. Okay. Remember, we always have one general fund. We can only have one general fund. These other funds are created for specific purposes. When we need them, we don't create more than the number that we need. In fact, we create the minimum number that we need in order to faithfully represent what the government is doing. Okay. So we don't have a profit motive, right? We don't have revenue and expenses and trying to maximize net income, right, with our governmental funds. And so therefore, we don't have a normal accounting cycle. We also don't have kind of that check where we're always trying to maximize net income. Instead, we're trying to show how we've used our money. So that's fiscal accountability. Has it been used how we've said we're going to use it? And then current financial resource measurement focus essentially is looking at only current financial resources. So we're not going to have long-term debt in our governmental funds. We're not, so that means no, like you wouldn't have a notes payable that is, out there, or bonds payable that's due 10 years from now or something like that. We also don't carry any kind of fixed assets. So you're never going to record in your governmental funds something like a police car or a building. Instead, you're just going to record an expenditure for those things. And then another really important part about this is we have budgets, and they are formally integrated into the accounting records. So at the beginning of the accounting period, we record our budget. That goes into our accounting records. And then at the end of the period, we close out the budget, and that closes it out. So while you've done budgets in other classes, like your cost classes or managerial classes, those budgets are different. Okay. You're going to see that we handle budgets differently here because we're actually doing journal entries for budgets and not just using budgets as a planning tool or a cost, what would I say, like a cost control measure. That's not specifically at least the part that we're focused on is the journal entry part of the budgets, and you haven't done that in any other classes. That's just not how budgets are used in cost accounting or managerial accounting. Okay. So what we have is three distinct processes, okay, or three distinct types of journal entries that we're going to do. We're going to do budgetary entries, encumbrance entries, and actual activity entries, okay? And an important part about this, so if you have these, so budgetary, encumbrance, and activities, the really important thing to note here is you can learn each of these, or you do need to learn each of these types of journal entries. And also you need to learn that always keep them in their same lane. Okay. So don't mix, and the people who have created the exam, they try to trick you with this, but they give you a fact pattern, and it'll contain information about the budget, and let's say it also includes information about activities. Okay, so they're going to give you information to try and get you to mix up, but just always, 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 if it's a question about budgetary entries, keep it in the same lane. Like only focus on the information on the budgetary information. If it's a question about encumbrances, only focus in on the encumbrances part of the fact pattern. And then same thing with activities. So I tell students to maintain your lane, stay in the same lane. Oops, something like that. Stay in the same lane for each of these. Don't cross lanes. Don't start to do things with the budget and then switch to encumbrances. Or don't start with encumbrances and switch to activities, or activities and that. Don't change lanes. Okay. Always stay in the same lane. Okay. So what that kind of means is, so we book these journal entries, record them, and then we close them out. And you'll see we actually close them out for the exact same amounts. Okay. So kind of interesting. And that's why students, especially with the budgets, students will get confused. Like, wait a second, if you budgeted a certain amount of money and then you spend a different amount of money, like, don't we need to change the budget? And it's like, no, but we're recording the budget so we can formally integrate it into our financial statements. We're not necessarily using the budget like you used it in managerial accounting. So we actually book those amounts and then we close them out, each one of these for the same amounts. Okay. Okay. So with our budgetary accounting journal entries, what you need to do on these is, at least the way I think about it, is you have an account like, let's say, revenue. Okay. So we think about that account, it has a normal credit balance, right? Well, if we're recording our budget, then it's not revenue that we're recording estimated revenues because it's at the beginning of the year, right? And so if revenue has a normal credit balance, right? So let's just say you have revenue and then cash or something would be your normal journal entry for revenue. But for the budgetary entry, you're going to switch it. It's going to have the opposite balance. So you're going to record it as estimated revenues. Okay. And did I end up? Sorry, I've been probably looking at this iPad the whole time without looking up at you guys. Sorry. I was going to do it on the computer so I could talk to you for just a little bit, but I think I just jumped right in. So I apologize. I'll do better on this. But anyways, estimated revenues, we're going to debit that account because it's the opposite of a normal revenue account. Okay. So if you look at this, budgetary accounts are posted only twice during the year, at the beginning of the year. And then, so what we're going to do, I could write this all out, but I have it in the next slide. So at the beginning of the year, we are going to record estimated revenues. Okay. And that's so for anything we expect to generate revenue from. So that'd be tax revenue, fee revenue, assessment revenue, anything like that would be debited at the beginning of the year. So we expect to collect $2 million. Remember, we recognize revenue under modified accrual accounting when it's measurable and available. Okay, this here is kind of interesting. This will be a new concept to some of you. Estimated other financing sources. Okay, so we don't record long-term debt like borrowing money, issuing bonds, and so instead we record when we borrow money. So we'd receive cash, and then we would credit estimated other financing sources. Okay, or sorry, not estimated. Just a sec. Oops. Well, I don't know how to get my eraser back up. Sorry, we're getting crazy now. Let's see here. Let's get back here. Okay. I swear it started to come up here, but anyways, there. Other finance. So when you borrow money, you debit cash, you credit other financing sources. Another time we use other financing sources is when we transfer money in. Okay, so kind of two examples of other financing sources. You can see that normal balance is a credit. Therefore, when we record the budget, we debit estimated other financing sources. So this is money we're expecting either to transfer in or borrow money. Okay. Appropriations control. Appropriations is just another word for expenditures. Okay, so estimated expenditures, think of an expenditure account as a normal debit balance. And so estimated expenditures would be a credit balance. Right here. And we call that appropriations. So we expect to spend during this period $1,950,000. Okay. Estimated other financing uses. That would be any money we expect to transfer out of this fund. Okay. And then your budgetary control account is going to be the difference between what you expect to bring in and what you expect to spend. In this case, we expect to bring in more than what we expect to spend. So we have a credit to budgetary control. Okay. So this is the budgetary entry. You've got to have this down. You record this at the beginning of the period. And then regardless of what activities happen or what encumbrances we record at the end of the period, you just reverse. And so this is kind of what I'm talking about when you keep things in the same lane. What a messy slide. But anyways, at the end of the period, you reverse everything for the exact same amounts. See that? We debited all those accounts to reverse them, to close them out. And then you reverse your estimated revenue control account and your other financing sources account, close them out. That is your budgetary entries. You've got to have that down and know that you do the exact same amounts. Okay. All right. Encumbrances. This is a different concept than anything that is used in for-profit accounting or non-governmental, not-for-profit accounting. Encumbrances are only used in your governmental funds. Okay. And the logic behind an encumbrance is when you issue a purchase order. Okay. So you watch for that wording. We issue a purchase order. Even though we haven't spent the money, even though we're not legally obligated to go through with it, we may be or we may not be, but we want to remember we kind of have our envelopes for our different funds. Okay. We want to think of it as putting like a little sticky note inside of this envelope saying, hey, remember, we're going to spend this money in the future. So we issue the PO to purchase something, and then when we receive it, we're going to spend the money, right? Well, before we receive it, when we issue the PO, we want to record an encumbrance. We want to record a reminder that we're going to spend that money. Okay. So don't think of it as a liability. It is not a liability. It's a reminder that we have either a commitment or assignment, which we'll talk about the difference between those two here in a little bit. And it reduces available fund balance. Okay. So if it's a reoccurring expenditure, and notice we are using the word expenditure because we're talking modified accrual accounting. So if it's reoccurring, we're not typically going to use encumbrances. Instead, look for the words purchase order. Okay. And then, so we record the encumbrance, and then we close out the encumbrance when the actual expenditure is made. That's the activity. So remember, we had BEA. The activity is when the expenditure is actually made. So you always close it out for the exact same amount that you recorded. And that also is something that confuses students. And so either we close it out when the expenditure is made, or we can close it out at the end of the year. I'll show you how to do that. Okay. So let's look at an example of this. $200,000 has been budgeted or appropriated for the purchase of 2 sanitation trucks at the beginning of the year. A purchase order. So we don't do the encumbrance at the beginning of the year when it's budgeted. Okay, that's going to be part of our budgetary entries. It wouldn't be a separate line item, but it'd just be part of expenditures or appropriations, estimated expenditures, appropriations. Okay. But we do record it when we issue a purchase order. So right here, so a purchase order is issued to purchase 2 sanitation trucks at an estimated cost of $100,000 each. Okay. So this is when we record our encumbrances. So we debit the account encumbrances and we credit budgetary control. Okay. Your textbook uses a different account than what the CPA exam uses. And so I'm trying to prepare you guys for the CPA exam, right? And so I want you to use budgetary control, and that's our credit. The textbook uses encumbrances and encumbrances outstanding. You'll notice, especially the reason I don't like to use that is there's another account that the CPA exam uses that's always wrong. And it is estimated encumbrances, I think. Anyways, I would just learn it this way if I were you. So debit encumbrances, credit budgetary control. This is how we record our encumbrance. Remember, it's kind of like a sticky note or reminder. Hey, we have some expenditures that are coming up. And yeah, so use credit budgetary control. Oh, here we go. Yeah, so textbook uses encumbrances outstanding. Okay, so this is the amount we record it for. Then we receive one of the trucks. So the invoice is received for one of the trucks at an actual cost of $110,000. Okay, so this is illustrating a point. Remember, we recorded our encumbrance for $100,000 each. Well, we receive it for $110,000. Ignore that, disregard it. If we've received the truck, then we need to reverse the encumbrance. And so the way you reverse it is just the opposite of what you just did. So we credit encumbrance, debit budgetary control. Then though, now that we've received it, we need to record the expenditure. And so you debit for the actual amount. So for the $110,000, now we're going to record expenditure and it'd be expenditure dash sanitary truck or garbage truck or whatever. And then if we haven't paid it yet, then it'd be vouchers payable. We can record that because that's a current liability, right? Remember, we don't record long-term liabilities. So if we got a loan on the truck or something like that, then we'd record it as other financing sources. But because it's vouchers payable, that means we're going to pay it in the current period. Or if we just paid with cash, then it'd be $110,000 cash. So you see how we record our encumbrance and then we reverse our encumbrance and we do it for the exact same amount that we recorded it for. And then this is the activity journal entry here. Activity journal entry here. So debit expenditures, credit vouchers payable. If we have, so let's say that other truck didn't come, and oftentimes they'll say that the encumbrances do not lapse. In that case, we're still going to close it out. So we close it out just like if we receive the truck, but then we have to do another journal entry where we decrease our unassigned fund balance and increase our fund balance committed. Okay. And then in the next year, when we actually receive the truck, then we would reduce our fund balance committed and all of that. Okay. Which they don't test that as much. Okay. So activities. These are the things that actually happen, the expenditures that we record in the current period or the revenue that we recognize. Okay, so we recognize revenue when measurable and available. So examples of revenue: taxes, fees, grants. Other financing sources are transfers in, bond issuance. Okay, so I talked about that. Other financing uses, transfers out. Expenditures are anything. Capital purchases, principal, interest payments, operating expenditures, anything that we use up current financial resources for. Okay, so different types of constraints on fund balances. Okay, so a non-spendable fund balance would be things like inventory, prepaid. I would say actually like prepaid expenditures probably there, but okay. So basically, this would be non-cash at this point because it's non-spendable. Okay, restricted is the most formal restriction, I would say, for a fund balance. And it's because it's imposed by external forces. So that could be, if we issue bonds for a specific purpose, then the conditions that we receive those bonds, whoever finances the project says that we have to use the money for that specific purpose. Okay. Committed is one level lower. This is coming from the highest decision-making authority. So that would mean like the elected officials. And so that would make the fund balance committed. Assigned is the next balance. And so we haven't formally committed to do it, but we intend to obligate it. So oftentimes, your encumbrances are either committed or assigned. So I often think of this assigned as like someone who's not an elected official in the government. So maybe like the city manager, if they're not elected, and they issue a purchase order, then it would be assigned. And then unassigned means that we have the actual cash. It's not restricted, committed, or assigned. And the important thing with this is that only the general fund will have a positive unassigned fund balance. Remember, we created all the other funds, the debt service fund, the capital project fund, whatever. We created them for a specific purpose. And so all of their fund balances are going to either be non-spendable, restricted, committed, or assigned if they have positive fund balances. Okay, only the general fund will have a positive unassigned fund balance, because the general fund can be used for just the normal government activities. Let's see on this. Oh, so with governmental accounting, fund accounting, we classify our expenditures. So this is where we use different numbers for to denote different things. So we'll denote which fund it comes out of, what function or program it's being used for, the organization. So kind of on this one, we're going to use our general fund. Function or program would be like public safety, and then organization. So within public safety, we have police department or fire department. So let's say police department, and then the activity could be drug enforcement, police patrol, parking, and then character is whether it's a current expenditure, capital outlay, debt service, intergovernmental, or something like that. And then object, personal service supplies, etc. So I'll show you, I need to show you a chart of accounts. I should have a chart of accounts in this PowerPoint. But basically we would have a number to denote all of these different things in order to record it into the accounting software. Okay, so basically what our governmental financial reports do is help us to assess financial condition, results of operations, evaluate the effectiveness, efficiency of the organization, compare actual financial results with budgets. Now on these questions, I don't know what to do. Either we can go through these questions here, or I can create quiz questions. I think maybe these are covered in some of the quiz questions. We'll just go through them right now. It's good to go through and see how to apply this information from a CPA exam perspective. So whenever there are questions like this with lots of numbers and different, rows of numbers, I just like to jump down, find out what are they actually asking. So what is the remaining amount available for use by the county? Okay, so the logic here, so we have our balances in our general fund, including the following. Okay, so this is what we expected to spend. Okay, so we kind of set that aside. Okay, encumbrances, we're saying, hey, we need to set aside money out of this 745, so we need to subtract that out because that's not available to spend. And then we had actual expenditures of 298. Okay, and so that's also subtracting down. And then this last one, the vouchers payable, we don't want to include that. And the logic is, with our expenditures, that's our debit. Our credit could be vouchers payable, right? Or it could be cash. Well, if we recorded this and this, then that would be double counting, right? And so vouchers payable isn't. And so then, let me just see here. Sorry, I didn't know if I was going to do these or not, but let's just do this math. So 747, nope. Why did I put 745? All right, 745,000. And then put minus 37,250 and minus 298. So we get 409,750. So A is the correct answer. Actually move my calculator over here so I'm not looking over at that other screen. Okay. And then there's the answer explanation. Okay, next one. The budgetary entry, what amount should Maple record as estimated revenues? Okay, so where do we receive revenue from? We receive it from property taxes, license and fees, yes. Proceeds from debt issued, nope. That'd be estimated other financing sources, or it should be all capital. Estimated other financing sources, so no. Interfund transfers for debt service. I don't know if we're transferring that in. Yeah, it's in inflow. So this would be also part of our estimated other financing sources. Okay, so that'd also be no. So 9 million would be the only estimated revenues we would recognize. And then remember, we would debit that account. And so then it goes through, talks about the different things that are estimated revenues. During its fiscal year ended June 30th, year one, Cliff City issued purchase orders totaling $5 million, which were properly charged to encumbrances at the time. Okay, Cliff City's appropriations do not lapse. Cliff received goods related to invoices at the encumbered amounts totaling $4,500,000 before year end. The remaining goods of $500,000 were not received until after year end. Cliff paid $4,200,000 of the invoices received during the year. What amount of Cliff's encumbrances were outstanding at year end? Yeah, a lot of information here, but bottom line, we recorded encumbrances for $5 million, and then we received the goods. Cliff received goods related to invoices at the encumbered amount of $4,500,000. Okay, so just because they paid $4,200,000 related to the encumbrances are only these two amounts. Okay, and then it says they don't lapse, and so we would have what amount of Cliff's encumbrances were outstanding. So we have $500,000 that would be, oh crap, $500,000 that would be outstanding at year end that we would close out. But yeah. So that's you can look through this PowerPoint. Yeah, I got to make sure this PowerPoint's actually available to you. New City issued purchase orders and contracts of $850,000 that were chargeable against year one budgetary appropriations. Okay, so we issued purchase orders of $850,000. We had appropriations of $1 million. Journal entry to record the issuance of purchase orders and contracts should include K. So don't get caught up on this, the appropriations. Instead, just focus on the purchase order part of it. So we would debit encumbrances for $850 and credit budgetary control for $850. Now we go look for an answer that matches that. So debit to expenditures, no, that would be an activity entry. Credit to vouchers payable, that would also be an activity. Credit to budgetary control, there we go, right there. Debit to appropriations, no, that would be a budgetary entry. Now I think it's wise as you go through these questions, you know, classify each one. That way, I mean, this may or may not be stuff that you do every day. Like for me, it's not, right? Okay, I only do this stuff when I'm teaching this class. And so I'm constantly just trying to remind myself, stay sharp on all parts of it. Okay. And that's it. Okay. So what I'm going to do on this is I'm going to I'll make sure this is posted, the PowerPoint, for you to go through and think through these things on your own. I'm going to post multiple quizzes on this material that you can go through and practice. Really, don't Google the answers or don't try to use your notes or anything like that. Practice it as if it's like you're taking it in the CPA exam. And then when you miss it, it's okay. Like I'll go through and explain it. You can also go through and look at it and think through it on why you missed it. I just want you to learn the material. Okay. Don't worry about your scores on the quizzes. I mean, try hard on it, study beforehand. But if you miss it, it's not a big deal. And hopefully you'll do well on these ones. So thank you guys for watching, and I'll see you on the next one.